But what about all the little guys? They need those particular parts and services or whatever from China. Now, this is its first, second, and third order, and it goes into the category of we just don't know. And it's really frustrating to not know.
John, I talk to you all the time, but it's nice to finally get you joining me on camera. Thanks for joining us. I want to talk about this whole concept of a trade war. If we're really going into a trade war, and some of the second order and third order effects of that. Like, for example, does a trade war mean that we're going to go into a currency war?
Well, trade wars always have a currency effect. We've never seen, we don't really have any historical analogies that I've seen. I mean, somebody can maybe stretch this kind of looks like this, or this kind of looks like this. But China, we've got two real economic superpowers. So let's not talk military, just economic superpowers, the U.S. and China. And both of them have debt issues. Both of them have government issues. They've got issues, but they are also economic powerhouses. They're productive. They're manufacturing. They've got strengths. And their currencies, China's going to be trying to take theirs down. I think for whatever reason, the Trump administration seems to want our currency to go down. I'm not particularly thrilled about having to pay more for stuff. That's inflationary. But as I was on a call with some people last night, one guy was talking about the big, just fall out of bed movement that the dollar was making. And, and I'm going, wait a minute, it's down 3 or 4%. That's not falling out of bed. You look at the historical ranges, it's up 20 and 30% moves over, this is not falling out of bed. This is market reacting on emotions, and it could go back, on that same emotional. Trump comes up with 20 wins. Argentina, Vietnam, whatever, Nigeria. He comes up with wins. The market starts, I guess. I don't know. We're in such an unprecedented world now. It's hard to say. I think currencies are probably going to be less affected by the trade war and the actual productivity of the countries and their sales. China getting cut out of the U.S. market is more damaging to their economy than the U.S. getting cut out of the Chinese market. That doesn't mean it's not going to damage the U.S. significantly and have, as you were talking earlier, second order and third order effects. We exempted Apple CEO Tim Cook and Apple. Okay, we should. It's an iconic company. We don't want to, mess around with a company that's really important, not just to the U.S., but to our global manufacturing, to our all of our trade. But what about all the little guys?
Exactly.
That aren't Apple. They're not $1 trillion companies. They're bouncing along at $50 million a year revenue, $25 million a year revenue, and they hire 100 people, 175 people, but they need those particular parts and services or whatever from China. Now, this is its first, second, and third order, and it goes into the category of we just don't know. And it's really frustrating to not know, because one company can depend for its entire production depends on China, but because it has to have 4% of its product from China, and so the price doubles. Well, that's going to mean their price to their end customer is going to go up by 1 or 2%. Not a big deal. Whereas if some company needs less, but it's a major portion of their expense, or they can't even be in production without that, or they're not competitive. That's a completely different story. And we don't know how that works out. We're going to find out. My feeling is, and this is just gut, that it's going to be more important than we realize. We have a government messing around with choosing winners and losers. I didn't like it when Obama was choosing winners and losers. I don't like it when Trump is choosing winners and losers. And that's what he's done. He said, Apple, you're a winner. All you little companies down here, you're losers. Um, and then, Lutnick comes on and says, well, they're only a winner for 90 days. I mean, it's all of this uncertainty. If you're a CEO and you're thinking, whether you're a CEO of a small company or a big company, you're going, should I take this shovel and put it into the ground and build a plant? And you're going, well, let's see how things shake out. We can plan, we can do design work, but do I want to commit the money and the time and the people based on something that could change next week after next month, and where it's all going to end out?
So, John, in your answer, you said, I don't know, or we don't know, several times. And I think that gets to the crux of the issue here, right? Like, the markets don't like uncertainty. Businesses don't like uncertainty. And I would argue that the American public isn't necessarily all that in favor of it either. I mean, Americans can rally behind a cause. We've seen it. If we feel that we're under threat, we come together. But we need to know what the cause is, right? What's the threat? And that is where I think this administration is really missing the boat. They're not articulating the reasons behind some of these moves, at least not in a way that I can understand.
What they are articulating isn't correct. Somehow or another, the world is cheating us by selling us cheap goods. That's the whole formula thing that they have, where how much we're losing to you is how much we're shipping versus how much you buy. I mean, that formula is silly. And the more I think about it, from the first time I saw it, I thought that can't be true. Somebody on Twitter or something figured it out. That can't be true. Turns out it was, and it was silly then. It's silly now. If Trump is trying to get to a transaction where it says he wants to lower barriers everywhere, because there are barriers to U.S. products. There are higher tariffs on other places. By the way, a value-added tax is not one of them, though it looks that way, but it's not. If he's trying to get to lower barriers, I'm all for that. I am still at heart a free trader. I want to be, I don't want the government picking winners and losers in trade. I'm a believer in Schumpeter's creative destruction. You've got to be able to compete. The U.S. has done extraordinarily well in moving to higher value added items. I mean, our electronics, our AI, all of this technology, all the stuff that we're really good at, that are high paying jobs, even in manufacturing, have increased dramatically over the last 20 years, 30 years, 40 years, while the jobs of making socks and T-shirts have gone away, and those have decreased. Those are low-paying jobs. I don't want governments picking winners and losers, trying to protect a steel worker's job. That's the jobs of the past. We want these jobs of the future. That being said, I mean, there are national defense and national economic reasons that we should deal with certain issues in certain companies. I would prefer it rather than just blanket tariffs, saying this particular company, this particular group or industry, this is where we're going to focus, and not just on everything. We don't lose a competitive advantage by buying stuffed toys from China or Vietnam or whatever.
We don't. But let me take the other side of that argument just a little bit and I want to ask about sort of the concept of resiliency, right? American resiliency. We saw what happened during COVID, right? Supply chains got shattered. That's an extreme example, but China and the U.S. have a very complicated relationship. And you could take the argument that, China's not doing enough to stop the import and distribution of fentanyl precursors and fentanyl into the United States. It's come out recently that China was admittedly behind a pretty major cyber attack on U.S. financial institutions and government and government entities. I mean, we aren't necessarily buddies, and so sure, do I think we need to worry about Chinese toys and T-shirts? No, but Apple is a great example. I mean, we are reliant on China not just for the low end manufacturing, but now for the absolute high end.
And that's why I've come back to you and say there are groups that we can identify that were part of that hacking. Okay, the problems they're part of the. I mean, we can come in and we need to target companies and say, here's a pain point that we're going to do it till you fix this problem, till you stop doing this behavior. No more weather balloons over the U.S. Those type of and we need to target pain points rather than just blasting not just China but the world. And by the way, I'm all for getting very, very serious with China. The supply chain issue, we had that wake up call in 2020, and businesses are diversifying their supply chain all over the world. Nobody wants to get back into another China. I mean, CEOs are dependent on the China supply chain are waking up every morning saying, what are we doing to move to X? Mexico, Vietnam, Bangladesh, India, the likely winners that are going to be coming out of this. So, I mean, we get too much of our pharmaceuticals from China. We just do. I live in a country, Puerto Rico, or territory, I should say, a country, that has millions of square feet of pharmaceutical manufacturing buildings that are empty. We could move it here if we just went back to the tax structure that we had in the 90s and the early aughts that allowed favorable tax treatment for Puerto Rican companies doing their pharmaceuticals in Puerto Rico. They changed the rules thinking everybody would stay. They've already got this money. Companies just left. 50,000 jobs disappeared. It was a big body blow to Puerto Rico. Incentives matter. And so as a government, we needed to create incentives for people, but try not to pick winners and losers. It's a very complicated thing. And, I get that all of a sudden you've got, 75, however many countries are calling. Okay. You may have to get the assistant to the undersecretary of Treasury to go deal with some country, but go sit down, start the process, get it done.
Who are your go-to people on this topic, John? Like sort of the geopolitical and economic relations with China. Your role at X is famous. So who are the go-to people for you when you are researching this?
There's nobody that's right, but there are people with opinions. And by the way, somebody will end up being right. But so for instance, Louis Gobb is somebody, he'll be at our conference. I've been reading Louis for 20 years. Renee Anino has really good contacts into Treasury and trade.
George Friedman, probably.
George Friedman. I mean, there's a lot of people that have good insights on that. Felix Suloff really has a big handle on China. I mean, you have to if you're a big macro trader these days. So, I mean, little brief plug for our SIC. We have a lot of people that will be pulling this whole tariff and China thing into it, not because they started looking at it just now, but because they've been looking at it for decades.
I'll lean into that plug a little bit and just say, viewers, all these people are going to be at our conference. The SIC is the Strategic Investment Conference, and you can learn more by going to www.sic2025.com. Shameless plug, but this is an important year, and I really want people to go. One more thing I want to touch base with you on, John. The bond market got a little shaky. And this is again another thing where you ask 10 people why that happened and you get 10 answers. What are your thoughts on bond vigilantes?
What happened is that it was just a bond market was acting orderly. Stock market had problems, and then the markets in general had a big margin call. When you have a margin call, you don't sell what you want to; you sell what you can. Treasuries can sell. So markets. I mean, in our clips that matter, we set out the difference between treasury rates and the dollar, and they trade. High correlation. We've got this yawning gap. I mean, it's and it'll snap back. But it gapped because in the middle of meeting this margin call and people selling, then you've got something that almost every big macro, $100 billion hedge funds are doing. And it's the same thing that got people in trouble in 1998. And it's the basis point trade where, treasuries move a few basis points. Well, that's not going to make anything. But if you leverage up 100 to 1, now you're making, 1 or 2 points a month. And they leverage these things up because back in 98, it was the 30-year bond and the 29-year bond eventually come together in a very predictable manner. And they do that in every bond market all over the world, with the exception of when things exploded and the margin clerks hit it and boom, it gets out of whack. Not because the 30-year and the 29-year are eventually going to be the same, but because for a brief period of time, people were being forced to sell at the wrong time.
So you don't buy into the argument that that bonds were under pressure because a large bondholder, i.e. China, was dumping.
It's clear that China is not a seller. I mean, they're letting their bonds roll off, just like the treasuries letting their bonds roll off. But they're not going out and selling in any size. Nobody is. I think that market will settle down after you get all the margin calls, and we may end up finding a few dead fish, pretty large fish floating here and there. That's what happens when you get these things. But I think this was just a normal, if once in every 10, 15 year normal, a margin call, and it just started having repercussions all through the market. Now, longer term, I think Dalio and a few others are right. And I think they're right because I've been saying this for 10 or 15 years. Bonds are going to be looking at the U.S. accumulating debt, and they're going, I think I've got currency risk here. I've got, they're not going to have payment risk, but I'm going to have valuation risk. So I want a little bit more interest for that valuation risk. I mean, when you were buying Argentina bonds at 30% or at 100% or whatever, people were willing to take that bond and get that interest rate because they thought that it paid them for the risk they were taking. And the same thing will happen with the U.S. Same thing happens in Europe all the time. I mean, we've noticed that German bonds in euros trade at a different rate than Greek bonds in euros trade. U.S. bonds, because we're going to, at some point, I think, get out over our debt skis, that'll trade. Now, some people think we're seeing the beginning of that. I'm not persuaded. I don't think we've gotten to that point yet. Will we get there? Yeah. Do I think we're there by the end of the decade? Yes. So every time you see one of these dollar and interest rate moves, people are going to start saying the bond vigilantes are showing up. And like the little boy that cried wolf, one day they're going to be right. And that's what will create the crisis. Which is why we need to understand what that's going to look like when it happens so that we can make sure that we're not, standing in front of the bus.
What does it take, John, to fix the problem? Because I think a lot of people assume we've got to eliminate the deficit. Step one, eliminate the deficit. And then we got to start paying down the debt, which is a whole nother thing. Is it that extreme, or do we just need to bring it down?
No, it's not that acute. Now, do I want to eliminate the deficit? Yes. I mean, am I a small, I'm all of the small government, Milton Friedman, I'm all of that stuff. But the reality is in the market world, if we got the deficit below nominal GDP, so let's say that you're growing at 2% GDP and 2% inflation on a $30 trillion economy like we are, that's 1.2 trillion of nominal GDP growth. If we got the deficit below $1 trillion, the market would go, okay, it just would. Now, should we get the deficit and the debt much lower than that? Yes. Do I like what Doge is doing? Yes, I do, for a very specific reason, even though it's creating chaos. We've tried since Reagan. We've all been against waste and fraud, and nothing happens. So they're just coming in and without mentioning a particular friend of mine that is a now confirmed, very highly placed figure in the administration, whose budget underneath him is into the multiple hundreds of billions. They cut 20% of his staff. Boom, gone. You're gone. And he's bitching and moaning about it to a mutual friend. And I'm going, yeah, good. His job now is to go back into Congress and say, okay, but I want to replace these people, and I'll give you these people, and we'll get rid of them. His job is to shrink the government. He knew that going in, and he was trying to do it in an orderly way. And Trump is saying, no, we're going to shrink the government. Now, your job, sir, which you took, and you went through the Senate confirmation. Your job is to figure out how to really shrink the government, not over 5 years, but over the next 5, 6, 7, 8 months. We've seen so many instances of just junk they're finding. I mean, it adds up $1 million here, 5 million there, time there. I thought the one was, they said I think it was IRS, but I forget who. They said, we want to move the sign-in button from the middle lower page to the upper right page, which is where it is on every other website. And the staff came back and said, well, it's going to take us 6 months, and here's the budget and the people. And one of the, quiz kids came in and moved it in 71 minutes, or it was 51 or 71. Just boom, here's how you move it. These people are living in a world that doesn't exist anymore. Just you and I keep having conversations about AI out of this conversation, but how it's beginning to impact our lives and how we're trying to integrate it. And I'm an old dog, but I'm having to learn new AI tricks. It is pretty cool. These people haven't done that yet. There is no reason in my mind, and I've not asked anybody, but the IRS has a very clear set of rules. Nobody understands them, but it's a very clear set of rules. Why can't you just dump those set of rules into an AI and says, here's your rules? And just like my partner, Mike Roizen, has trained Hippocratic AI on, he's their longevity expert. They've got all the tens of millions of words he's written, all of the research he's done, all of the research everybody else has done, and they've put that into an AI. So when you ask now a question, and they're now actually training people and doing this, and when you ask them a longevity question, it will give you a longevity question just like you were sitting and talking with Mike Roizen or any other 10 of the best longevity experts in the world. And that's something that is subjective. Okay, if you've got an honest to God set of rules, why can't they train an AI on that? And then all of the people that can't get an answer from the IRS now get an answer that is correct. And it's going to be more correct than it was if people were doing it. Will they make mistakes? Sure. Will we find out that some rules conflict? Probably. I mean, but that's the type of thing that if you ask the government to do, they're going to take years to do that. No, just do it. Uh, I like that. So we're going to have to cut the budget. We're going to have to raise income. Going back to your original question, we're going to have to cut budgets dramatically. We're going to have to raise taxes. I still think a value-added tax is going to be the way to do it. I think tariffs are wrong. Um, and we're going to have to set an established path. And it would be good to set it. The sooner we do it, the better, because that forestalls the crisis. But we'll do it in the middle of a crisis. And we always do. I'm optimistic about the future. All of the things we're seeing. I'm just not optimistic about government footprint. But that creates a lot of chaos, a lot of uncertainty you were talking about. And that's what we as investors, as businessmen, as individuals, that's what we have to navigate.
The biggest investment opportunity of the next year, my guess, is investing now in the company that is going to get the contract to implement AI at the government level.
We'll be having AI people at our conference. We need to understand what it can do, but absolutely. We've got the chief technology officer from Palantir is going to be speaking.
Not a coincidence, by the way. I mean, that very well could be the company. That's not investment advice.
They focus on defense, but there are, and I know this for a fact, and you know too, there are a dozen companies that are government contractors that are using AI that if they had a chance to go in and do something like that, oh yeah. It'll be a competition. And in some instances, you may just say, okay, we've got 20 things we want to do. Here, you do this, you do this, you do this, and just, do it. Change it, because whatever they do is going to be more efficient than what we've got now. So I'm excited about that. I'm troubled by all the geopolitical stuff. That's why we have a lot at the conference. We've got a lot of geopolitical analysts coming in, we're going to be looking at actual, how do you invest? Here are the things you should be doing to invest. We're going to be talking, and I didn't realize I'm doing an SI pitch here, but we're going to be talking about society and structures and what actually brings us up to the crisis and how we react as human beings and what we can look for along the way. And then how do we get through this? These are the questions in my mind when I'm, and now it's you, it's not just me, it's a team, as we begin to structure our speakers. These are the important questions. I look at it. We've had this will be our 21st year. We've had some years that were important. 2008 was a very important, very timely SIC. 2020 was certainly, the attendance was the neat. I think 2025 is one of those years where there's the amount of uncertainty out there creates, as you learn to navigate that. And we're talking a month out now. We'll know a lot more of how things are going to work out with Trump. We're going to have a significant administration figures in addition to people that are close to the administration, so that we're going to be getting a handle on how these things are working out.
John, thank you for your time. I'm going to leave it there. There's going to be hours and hours and hours of insight coming at the conference with you and I interviewing some of the world's thought leaders. I can't wait. Thanks for this little preview.
It's going to be fun. I'm excited about this year. Thank you, Ed.
Good to see you, John. So we hope to see you at our Strategic Investment Conference. It's online only. It's virtual. It begins May 12th, and you can learn more by going to SIC2025.com. I'm Ed D'Agostino. Hope to see you there.